interest and interest rates. It's something that you pay the bank to borrow money. And most people get a loan on their house or their car. Those are the biggest expenses that a person has in their lifetime other than having a child. So for many people, they don't have the cash to buy a home or to buy a car. However, buying a home and buying a car are two different things. A home will have a lower interest rate because on average, it's considered a better investment or a safer asset than a car. A car, because it goes down in value on average, unlike a house, which goes up in value on average, a car loan would tend to be a little bit higher, especially if you have bad credit. There was a time in my life where I had bad credit. I had a loan for almost 25% interest rate. Currently for buying a house in America, the interest rate is about 3 to 4%. So when you talk about things such as an RV, a recreational vehicle, such as a regular vehicle, when you talk about buying even a manufactured home or buying an RV lot, these things, even if they're considered assets, have a higher interest rate on the loan because they are a less valuable asset that will either not go up in value as fast as a safer asset such as a home, or they'll go down in value. So the bank is taking a higher risk giving you money to purchase this item. And the big banks take all these loans for something such as a house, which is considered an overall safe investment, and they bundle them together and they sell them to other banks, okay? And so when you're talking about loans on items that are not as safe as housing, then the banks have a tougher time reselling them and repackaging them. So they have to make sure to make their money up front because they're taking on more of a risk giving you money to buy an asset that's not a good investment. So when you buy an RV, the interest rate may be 5-7%. Same thing with a car if you have good credit. If you have bad credit, it's going to be even higher. But again, at the same time, if you buy a house, your interest rate is going to be almost half of that, 3 to 4%. Okay, so again, most people get a loan to buy a home or to buy a vehicle. And, most people live on payments. The average car payment in America is around $600. The average mortgage is around $1,500, not including HOA fee or property taxes or home insurance. So what happens is that people pay not just the money that they owe someone or owe the bank, but they pay a higher interest rate for certain assets. And over time, over 10, 20, 30 years, they pay almost 3 times the value of what the item was listed for sale. And so if you get a motorhome, they have 20-year loans. And if you get that loan at 5 to 7%, you're paying double the price basically of the item if you bought it for cash. However, you're paying because you want the ability to stretch out the payments because you don't have the money up front. And this is how you get caught in the rat race, okay? And this is why I'm a little bit scared now on what my next decision is to buy something, because I worked hard to get out of debt. I own my car. I don't have a house. So for me, I have no problem saying, look, you're always going to, unless you get really lucky, you're always going to need to work in life to a certain age, and you're always going to have bills. You can't get around that. But I want to live below my means, and I don't want to be controlled, by banks or interest rates. I want to have more options. And so, look, at a certain point, you have to bite the bullet and buy something to have a higher level of comfort or more convenience. Because if not, what's the use of working or having the fruits of your labor? Nothing. So, but I want to be cautious because I got caught in the rat race of life where I'm buying assets. Like I bought a car, but I had no choice because I had bad credit and not much money with a 25% interest rate. So, when I had a house, my interest rate was about 5 or 6%. Okay. And that was considered low at that time, 15 years ago or whatever. So interest rates are based on the asset, whether it's a good asset such as a house or a bad asset such as a car or RV or a manufactured home. Those are not considered good assets. They're considered, a little bit more risky assets or depreciating assets. And also, obviously, based on your credit and your financial situation. When you apply for a loan, they're going to pull your credit report. They're going to know your bank statements. They're going to know your tax returns. They're going to basically know you naked from a financial standpoint. And for many people, they may know their spouse. They may have seen their spouse naked, but they've never seen their spouse's credit report. Many people don't. And that's why that's a major cause of divorce, financial problems. But what I want to tell you is you have to be cautious, okay? What assets you're buying, what type of loan you're getting, the interest rate, not just the payment. And you have to think like a bank. You have to think like a bank. If you're buying an RV, a car, or whatever, and there's nothing wrong with those things because I like those things. And again, you work to enjoy the fruits of your labor. Just have to be mindful that it's a higher risky purchase because it's a depreciating asset, not an appreciating asset. But at the same time, you don't want to live in an uninspired house just because it's a safe play. You have to just consider all these factors, count the cost, know your budget. You should look at your financial situation the same way the bank will. You should look at the past 2 years of your tax returns. A bank, when you apply for a loan, they're going to ask you for 2 years of your W-2s and maybe your tax returns, because they want to see not just how much you made from a gross standpoint, but after deductions and losses and what was your net profit for the year as far as your salary and everything. So look at the past 2 years of your tax returns. Look how much money you made and how much money out of what you made actually came into your pocket and you paid taxes on. Then look at your credit score. Is your credit score 750 or up, which is good? Is your credit score 600 or below, or 500 and below, which is bad? Look at your debt to income ratio. How much total debt do you have? Whether it's college loans, car loans, any loans, credit cards, right? Look at your loans. Then look at how much income you have. And that's your pretty much, with a certain basic formula is your debt to income ratio. And they don't want it to be too high because then basically you don't have any extra money after you pay all these loans and you're pretty much one emergency away from bankruptcy. And when you look at your own situation, like a bank who will give you a loan will look at your situation, you are more informed, you have more power. And it doesn't mean that you're going to get a better interest rate, because the bottom line is if you ain't got no money, you're going to be like me. You got to take what they give you. But at least it will start the process of you informing yourself, building a knowledge base, being aware of your finances, and it will help you down the road because you'll be more conscious of financial literature and financial understanding. Okay. Look. Average person going to make the average salary. Above average people going to make above. Below are going to make below. Your salary doesn't determine your worth. Your character does, okay, and what you do with the context of your life, okay? We're all human. We all have mistakes, but some people are troublemakers and some people are just trying to do the best they can. So try to do the best you can. Again, don't judge yourself solely based on your salary, but be honest with your financial situation, okay? And look at what you're going to purchase. Is it a good asset or bad asset? Look at your debt to income ratio and look at your situation like a bank would, so you can kind of get a feel for what's going to happen and where you're going. And I think if you do this in life, you won't be perfect, but you'll be better. And that's what life's about, your best life, doing the best you can within your abilities to live your best life, okay? And try to figure it out. And if you can't figure out nothing, show up. And overall, may the 90% of your content and the 90% of your life be positive. We pray for the 10% of times where we fail or whatever, for God's grace. But I believe, okay, that how you live matters. I believe that life can still suck, okay, but I believe we're here, so let's make the most of it, okay? I'm not bothering you, don't bother me, okay? And I believe, guys, okay, this video has some value. If you believe it, click that thumbs up. Subscribe to the channel if you're not. Click that blue join button if you want to support the channel. Check out my playlist with thousands of free videos where you can see the context of my character and basically what I make videos about, okay? And it's not about other people, okay? The 90% of my videos are not about other people. They're about things that I've learned, things that I want to share, whether they're funny, informational, or inspirational. Okay. So thank you for watching. With gratitude in my heart. Peace.